Everything always has a purpose or a reason. What we have learned first about the five elements in overcoming and generating are now meant to be incorporated with the Ichimoku time theory. Theory of time is the most important aspect to Ichimoku. The Japanese concept, the market is based on time and the price is only a consequence. The theory of measuring price volatility is also an important tool to identify reversal points. In summary, the theory of time is to determine the time axis at X, and the theory of measuring price volatility to determine the value of the y-axis as shown in the previous slide. Strictly speaking, the difficulty of price volatility is not in how to see a combination of volatility, but volatility before and after the time period between your decision. It is also integrated on the back nine of the model. That is, we need to understand that price cannot stand alone. We must combine the theory of time because time is the cornerstone. It is also the most important core and determinant. No time, there is no fluctuation. No matter what anyone may tell you, the theory of time is meant to be used with the daily time frames or higher, but feel free to experiment with other time frames. As mentioned above, there are basic numbers in the Ichimoku time theory, and those numbers will be used to determine possibly where price might in the future be. Knowing this can help you in many ways. Theory and practice of Ichimoku is based on the Nikkei index, which is the most widely quoted average of Japanese equities, similar to the Dow Jones Industrial Average. In fact, it was known as the Nikkei Dow Jones Stock Average from 75 to 1985. Research for decades done only for the Japanese traders so that the transition 9 Tenkan-sen, 26 Kijun, 52 Span B, 26 is normal because this was based on a 6-day working week. In the 1980s, when Ichimoku was introduced to Europe, scholars began to change the parameters based on a 5-day working week. Therefore, they proposed to change the parameters to 7, 8, 20, or 22, and Span B 44. Facts have proven that indeed a change of parameters is more suitable in Europe and America, as long as the crosses are not Japanese. But is this argument better? So let's first get started learning the Ichimoku numbers. These are the milestones that Gochi Hosoda considered prone to reversal points. I suggest you get a pen and pad and write these numbers down because you will use them quite often. The key Ichimoku time element main numbers are 9, 17, 26, 33, 42, 51, 65, 76, 83, 97, 101, 129, 172, and 200. You'll find that when applying these numbers, sometimes you might hit it exactly and sometimes it might be off a few numbers. The margin for error is plus or minus 1. This means if you were looking for 26, then you could also use 27, which would be plus 1, or 25, which would be minus 1. So how do we start using the numbers? There are a few different ways to use the numbers. Start with your daily chart or your weekly chart. If you are trading the H1 time frame, then start with the daily, and if you are trading the H4 time frame, start with your weekly. This is how I have been taught, but I myself start with the daily chart and use the 4-hour chart to trade with. So let's use the daily in our examples. Open the daily chart and start from any bear or bull fractal. Place a vertical line on any bear or bull fractal low or high. So you see I placed a vertical line on the fractal low on 120, 2016, and this is my starting point. Now you can see that I have placed another line 9 days apart on the candle on 2/2/16, which would be 9 days, not counting the weekends. I use 9 because this is the first Ichimoku number. On the 9th day, the price of the pound yen started to decline, much like we expected. Now I have drawn a line 17 days from the first line because this is the next Ichimoku number in sequence, and on that 17th day, prices made a small rally in the bull market. So now I made a line 26 days from the first day because 26 is the next Ichimoku number. And again, even in the bear market, price has rallied as expected with the Ichimoku numbers. You're not convinced yet? So I jumped ahead a bit, but look at every line which represents an Ichimoku number. We had a reaction. Now at our last number, 51, you could see the big decline in the market. Being at Kumo resistance, this would have been a good idea to look for a price action short. Right at this 51 level, we should have been looking to trade short. Based on the 51-day Ichimoku number, we would have been looking for a decline in a bearish market. Therefore, we should have looked for a short opportunity here. You'll learn much how I trade this based off of the previous high, using that as my stop loss, and breaking the previous low. At 0.76 and 83, price does make a change of direction. At 76 and at 83. At 76 we moved up slightly and then had a pullback to 83 and then we moved out. I just had to show this last example, but even 129 days later we can still count on the Ichimoku numbers. As you see on day 129, price did not go any higher and then found a way lower from the Ichimoku number 129. As you see, 129 and price declined. We're up against resistance. That's a good thing to remember. So basically I just wanted to let you see, on the 9th day the market rallied. On the 17th day the market fell one more day and then rallied on the 18th day. Alright, then on the 26th day the market declined a slight bit. On the 33rd day the market declined again. We had a move up and then probably a big news day on the 42nd day, but the market bounced right off of Kijinsen and declined, much like we thought it would on the 42nd day. On the 51st day we had a big pin bar on day 50. We had a nice rejection on that level, and we have major resistance ahead of us with a flat cloud, big thick cloud, so we kind of feel the market having a hard time getting through there. So on the 51st day the market rises one more day to the 52nd day, which we're allowed one day plus or minus, and then the market declined to support. Then you could see this big wick candle here that would let you know probably to get out of the trade. The market again pulls back up to day 65, and on day 65 the market drops down to support again. I could not plan this myself at all. This is what the market does, so there's not a way for me to plan this. I can start on any fractal high or low, long as it's a fractal high or low, not a fractal in between of the move. You want to start on an immediate high or immediate low. Some fractals are placed between, much like this fractal here. This isn't at the bottom of the move. You want to be at the bottom of the move. This fractal is in between the move. So now I've got some charts here to show you how complicated this can get, or how extensive. And we're not going to get that extensive. We're going to just start off very basic, and we're going to use those basic numbers to help us to determine how we want to make our trades. And then we'll hold webinars and we'll get much deeper and start getting much like you see here. But you can see they're measuring from both sides here. They're measuring from the middle over and over to the other side. So in total they got 205 days here between these 2 points right here, and they're measuring every point and every move to the end. So we don't have to get that extensive. You can see how extensive it is. And once you start playing with these numbers and learning, you can get even more extensive. You could see they had the 86th day here, and really our turnaround number basically is 83. Well, it turned around on the 86th day here, so they're kind of expecting a turnaround here. The market dropped in a bull market. It dropped. Here's another chart. Just want you to see how extensive it can be. It doesn't have to be this extensive. we can stay basic much like we're going to be, and then we're going to progress to even greater times like this. But you can see here on the 34th day, from this point here, from the low, you have to go from a low or to a high, from a high to a low or whatever. You could see the market move 34 days later to that point. Our number is 33, which gives us 1 day to the left or 1 day to the right, which would have given us 34. And then the market, really on the 35th day, the market was in indecision here, and then the market dropped to the downside hard. All right. And then they're also using this same point that was 34 has a 13 point from this point to this point. All right. So 13 days from here to here. All right. And then they marked here from the 13th point would be 20 days here. I don't mark all these days because basically I'm staying with the numbers, and I'm not going to get in between the numbers, and I'm going to say everything that's on the numbers. Some people give two candles to the left and two to the left, or three to the left and three to the right, which basically breaks it down to almost using every number, which really then there's no mystery to that. You're just using every number. All right, so that's not the proper way to do this, I don't feel. And here's another chart. This is as basic as we want to be. This is all we need. We don't need much like you see here, all of this. But this is the same chart. You can see what they have, just basic stuff here. The exact same chart, basically almost. You're going to see the same thing, just using a smaller. You can see how they broke it down here. But on this chart, they're not doing it as deep, so you don't have to do it as deep and still be able to make your numbers and do the numbers and still do the exact same thing that you're going to do if you get more detailed. You see the points that they're using here from this low to this high, pretty much middle, 35 to 35, and that's going to help you to understand these numbers. And then you can see here, pretty basic here again too. They're using 26. The number is 27, 1 day off. All right, so they marked it at 27. I mark it at 26, and remember where I should be. I don't go from the point to the point, and if it's not a number, I put that number. Basically, if this is 26 here, that's where I put my mark, not at the 27. Now, the 27 to here to 10, that looks like they're 27 to, I think they got that. I can't tell because they went from 21 to whatever that is. I'd have to count. That's 21 there. From here to here, 21. So they're using all numbers, all different numbers. They're having pretty much a big range, and I think the range should be 1 to your right and 1 to your left. 1 to your right and 1 to your left. Okay, here's a very extensive chart, but you can see they've got this expanded out deep, so you can see how much they're using and how much they're doing here. Now I want to just stay focused on the Ichimoku numbers. All right. And now you can see they're marking the numbers in red. 51, 76, 26. They hit 26 here, 25 on this day. They hit 67 here when our number is 65. Hit 128 here when our number is 129. Had a 14 when really we're looking for 17 here, so that wasn't a number. Then this one from here to here was 67. As I said, we're looking for 65. 43 here, basically 42 is what we want to hit. Have a 66 here, we're really looking for 65. So they're marking them and putting what the numbers are, and just knowing that you would see the turn. They mark the exact numbers red, 26, 51, 76. Now they're looking to do a wave count here, because you starting from the bottom here, you pull back. This is like a 1, 2, 3 pattern basically. And a lot of things that we've already done line up with the wave pattern, and you're going to learn much more about using the wave theory on our next unit. All right, after we do the time analysis. So now you can see how deep they're getting here. This is very extensive. We don't really have to get this extensive. So as I do it, you'll see how basic I'm staying with this. And then eventually we could get deep as this. I don't really see the main need to get this deep. All right, and they're taking us out to the future here, looking at where price may be at certain times and where price was at a certain time. We don't need to know exactly where price is going to be. We look for that one day and see if price hits that day, and you'll see pretty much like I showed you on my charts. Now here's a basic chart. Kept it pretty simple and basic. 9, 17, 26, 33, 42, 55, it's 51, 65, and 76. All right, and they pretty much did that from this point and extended all the way out. And this is, I don't know if this is a daily, this is a daily chart extended from 3/17/2008 to 6/3/2008 for 3 months of chart time they put on here and worked it all out. Probably had this set already and then just used it to find their points. All right, so that's what we have now. We're gonna stop here and go look at some live charts and be able to see this and how it works in real motion. And I'm going to show you how this really looks. So let's go ahead and start looking at the real charts and get off of the PowerPoint. All right, traders, so I want to show you another way that we can use these numbers. So I took time to draw these numbers out onto the chart into the future. Now what I did, I put it on the last fractal, bearish fractal. It wouldn't have mattered if I started back here or I started back here and just extended into the future so I know where I'm trading. But you want to be at a fractal high or a fractal low, so you could use any of those. Pretty much you like to use a nice point where you see the market react that day. So when I'm looking at this here, if we move this into the future, we're looking at every point here. This is a good trading day for me. That's what I'm supposedly looking at. So let's see what the market does, see how it reacts. This is day 9. So day 9, I'm expecting the market to drop. All right. Day 9, we don't get the drop on day 9, but day 10, look what the market does. So you're allowed one day on the left or one day to the future. So one day early or one day late. So 9, we would look at 8 or 10. And that's what we look at, 8 or 10, which would give us a chance to see if that market's going to react on that day. And we see a big reaction, and the market is going to just barely drop a little bit. You can see it dropped. All right, so it would give us a little trading opportunity. So here we would probably think the market's going to retrace and probably move a little higher. So let's see what the market does. This is day number 17. The market doesn't really drop on 17, but then we hit day number 16. Day number 26. So on day 26, I am looking for the market to bounce off of this Kijinsen, because I would expect that, because that's how you're going to use the number. If you line up with a support and resistance level, you want to really take advantage of that. So you lined up at support, you got a Kijinsen bounce here, you would like to take a trade to the upside on that. And you can see the market broke to the upside here. Let's see how far we get. It gives us a nice little trade, all right, because we look on our next day where we are. It gave us a nice trade off of that Kijinsen bounce because we expected it on that day. All right, so we got a nice little bounce off of the trade, off of the 26th day, off of the Kijinsen bounce, because it lined up perfectly. So that was not magic, guys. That is just something that Ichimoku has built in. Somehow Goichi Hosada just came up with these numbers, and they seem to work, and I can show you so many more opportunities how this really works. We're going to continue to move on and look at how this market will play out and how we could trade this into the future. So on day 33, we're pretty much looking for the market to probably drop. I mean, you could even draw support and resistance on your chart and see what's happening here. Now this would be a big zone for me, but I would be looking for that market to drop here on day 33. So let's see what happens. Get a small little drop here. little bit more rejection, then the market does start to fall. Now another thing you could see what really happened here is when you look at this support and resistance level, it's a great thing to put these on your chart, because even before the market gets to that point, you see where the turnaround point is. So this was day 33, another Ichimoku number, and it turned around the very next day. On 34 we were dropping. All right, so if you were prepared for that based off of your Ichimoku numbers and support and resistance, because you could see we would have had this level here, because it lines up perfectly with what you have here. You have resistance here, you have resistance here, and then the third time we hit that resistance and hit that 33 number, the market just dropped, guys. And that would have been a good trade here, and we probably look for the market to reverse back here at this point. So we hit on 33, and now we're looking at 42. See what the market's going to do on 42. Now that would have been a really good trade off of support and resistance. And then now on 42, exactly on 42, it looks like the market's trying to turn around. The next day we gap up right here. Let's see if the market's going to recover. So the market did move up from 42, guys. We went from 33 and moved all the way down to 42, sorry. On 42, we started to turn exactly. And then the market gave a little move and then came back and retested this level. Have to have your stop loss down here, because you could see the market comes right back to that level. And then we traded up to the cloud because we knew that we had resistance at Kijinsen. So we get up to the cloud here and we're going to see if the market, what it does at this point. So it starts to move down a little bit, and then we hit this next day. All right, so we had a really good opportunity here on 33. 42 gave us a little move to the upside. All right, so now we're at 51, day 51. So if you're looking at day 51, I mean, off the bounce here, you would have probably expect the market to drop here below the Kijinsen. You got a TK crossover that's bearish. But let's see what happens. See if this market holds truth or what's happening, because we are in a sloppy market here. Probably a market I'd be afraid to trade. I mean, if I saw this support and resistance level here and I hit it smack dab on 33, which was a great trade, I would probably do that. But you could see here, now the market's trying to bust out of here. We have support and resistance here with this whole cloud. The market needs to get out of there. So we went from 33 to 42, then 51. All right, so let's see what the market says to us at 65, and then we'll go to 76 and then we'll get out. So 65, we hit that support and resistance level before 65, and then it looked like we're going to drop here, and then we hit it again, and then we're hanging around here. So on 65, that market did not drop. So on 65, you had a bounce off of Kijinsen, off of the Tenkan-sen, and the market did drop here and then you reversed. So you had a bounce here. So let's look at this. And sometimes it's hard to tell what the market's doing because you don't realize that this little move here is a retrace, is a little bit of a retrace. So the market retraces, and when it gets back to the Kijinsen here, the Tenkan-sen here, right off of the Tenkan-sen bounce, the market takes off. All right. So this was part of another thing that if you put things together, you'll be able to find a good opportunity. All right, because we talked about the TK crossover. Now I'm going to jump into this trade. It's called Walking the Dragon. So when we're looking at that, we had a crossover. Let's call that crossover right. We can call it right there. So we had a crossover right here, pretty much right here. And then we go 1, 2, 3, 4, 5. The sixth candle, we bounced off of Tenkan-sen on the next day, which was 51 here, right? So we were 33, 42, 51, 65. So on 65, day 65, we bounced off of the Tenkan-sen because we also had a walking dragon trade right here, because the walking dragon consists of a TK crossover and then the market pulls back. The main things you want to see on your TK crossover are the market the angulation of Tenkan-sen and Kijun-sen. You can see here, both of them are angling to the upside very strong. So when you were up here on that day and you pulled down, then right here on this day, you really want to look at the market moving higher. You're not looking for the market to move backwards much like this. Let's see here. You're not really looking for the market to go from here and then go all the way down here in it would be 2 days, and then the third day really start to move higher. We moved higher on the third day because we pulled back from this point to this point, and then the market found support right here at Tenkan-sen after we had this TK crossover, and then we had 6 candles later we had this big candle happen off of the bounce off of Tenkan-sen. And that kind of trade, that was your walking dragon trade. As I said, you could see the angulation of Tenkan-sen and Kijun-sen. Alright, so we have another trade here, but let's look at the difference. Now this is a totally different trade. This is the rolling the dragon, alright? But it's a C-clamp, but this isn't a big C-clamp here, but you can see how tight Tenkan-sen and Kijun-sen are right here. And then they flatten out. They both flatten, Kijun-sen flattens out and Tenkan-sen continues to go. So let's erase now because you could see how tight they are. And then once it flattened out right here, this is where you're looking. The market flattened out right here. Even if you waited, then you got another opportunity. You always want to put your stop loss below the very low, and you're going to get into trade this back up to Tenkan-sen. Alright, because the market's trading back to equilibrium. So some people would have looked at this as a walk on the dragon, but you could still look at it but the problem is Kijun-sen was flat. So it's not walking the dragon, it has to be moving pretty much like this. Alright, now if you did think that was walking the dragon and you didn't catch this trade down here to move back to equilibrium, then here's what you're going to catch. The market moves back inside of Kijun-sen and Tenkan-sen. So you're inside that Tenkan-sen Kijun-sen zone, and you want to trade when it comes outside of that zone. Well, it never did to the downside, so you never entered that trade. It never closed or went down below Tenkan-sen here, because we went back up inside Tenkan-sen, and then we would have traded when we closed to the outside of Tenkan-sen. Now sometime you get a bounce off Tenkan-sen, so if it would have came here, bounced, and then went to the downside, that would have just been a bounce here, and then you would have saw Kijun-sen roll to the downside, and that would have been your trade. But see, you have to catch this because it's flat here. So the market's moving strong here, and then finally Kijun-sen starts to move. Tenkan-sen's already aiming high. So that's what you're looking at. This is a rolling the dragon trade right here. And this is a walking the dragon trade. We're rolling that dragon around. We're walking this dragon. Alright, but let's continue back to what we were talking about, basically with the time analysis. And we'll get deeper into those two trades because basically that walk on the dragon is one of the best trades you're going to be able to make with Ichimoku. But let's look again. Here we are. So we're going to go to our last number. We're 33, 42, 51, 65, and then our last number is going to be 76. We won't go any further than that. We'll go to look at another chart. So let's see what the market's going to do here. So we would have got a bounce off of that level and the market continued moving. So the market's moving higher. We need to see a little pullback here. Alright, so there we go. The market here, we would be thinking that the market's gonna fall to the downside because we hit smack dab on 76, right? And then on 76 we're starting to flatten out. So we flattened out Kijun-sen right here. So let's see what would happen here. The market falls down one day, basically it really was 2 days later. So we were 2 days off here and the market fell down. Now you're bouncing off of Tenkan-sen. You did flatten out a little bit, but not that much. It didn't really flat. Kijinsen fooled us. It didn't flat like we really wanted to see it flat like this, and now it's angling back high. So the market more than likely will continue moving. This isn't a support and resistance level, so now you can see the market continues to move to the upside. We never really flattened out, much like we are there a little bit. But yeah, that's it. So that's what we were looking at with those numbers. So we'll look at some more examples, because it's not going to be just the euro yen. All right, it's going to be a lot of pairs doing this and making these same exact moves. So let's look at some more opportunities and see how we could trade this, because basically, guys, like I was showing you, we really want to trade this off of support and resistance levels, off of Kumo breakouts, Kumo bounces. You know, if you get a breakout, look at, you had, this was a breakout here, but it failed. But then you see on this last day here, even if you're just looking at the breakout and you're not looking at the bounce, the breakout was good, because you got to look at how this developed. The market stalled here and dropped just a little bit. The drop doesn't have to be significant, all right, but on that day it made a fractal. But you wouldn't have known that, but on that day it made a fractal. 2 days later you would know that. But you could see what happened to the market on that day. All right, so let's look at some more opportunities. All right, guys, so let's try this again with another pair. So you can see I've drawn all my lines into the future. I've used the this time what I've done was use the Fibonacci time zones tool, because it draws these lines on here for you, and you just put in the levels that you want. So you have to put in your Ichimoku numbers, all right, because this fib zones are going to really be pretty much almost the same thing that we're doing, but they're using fib numbers. But when I look at fib numbers as opposed to the Ichimoku numbers, guys, there is no comparison. These Ichimoku numbers line up with the market perfectly sometimes, and it's just like, I can't understand what Gochi was thinking. Gochi was thinking about putting these numbers together and being able to figure out all this stuff. Nobody really knows. It's a mystery why he chose the numbers he did and how he chose the numbers he did. Now, I know he had some sons, from what I understand, that did take over the books and everything that he wrote, and much of the theory didn't get put out to the Western world, so that's why a lot of people here don't understand or know much about trading with Ichimoku numbers. Half of the Ichimoku traders you talk to probably never even heard of it. All right, so I know they don't really know how to trade it, because it's not really a big thing right now that people can get their hands on. So good thing we're able to have this knowledge and be able to use it to our advantage. But all right, so let's look at this. We're starting off with the with 0 here. You can see my numbers this time, they're labeled here so you could see. But at each point I'm going to look for something to happen in the market. Depending on what's going on, I'm going to study the market and make sure what I really want to do at that point. All right, so let's see what this market does when we get to the 9th day here. All right, so on this 9th day, the market looks kind of crazy to me, and I really couldn't tell you what I would do. I would probably want to trade up. We got a flat Kijinsen. I would probably want to trade up to that point. But Tenkan-sen and Kijinsen are together, so that's a problem. That's something I would be worrying about. But you could see the market rose a little higher and got up to our point, because what led me to believe that also was that on that 9th day I would look for that turnaround, and you could see we had to move to the downside. Now I'm going to look for the market to move to the upside. Well, what I'm looking at, we had a flat Kijinsen. So with that flat Kijinsen, I want to move to the upside, and that 9th day let me know that there was a possibility of the market moving higher that day. All right, so we move on to day 17. Let's see where we are. So we're sitting at day 17. Again, I would probably look for the market to move to the upside. Why? Because we're sitting at support, guys. We're at support of the Kumo cloud, and I would look for the market to move higher. We haven't really broken any of these bear fractals, so our thought process is pretty much the same. But now we have a tool that's going to help us to find points where we should look for the market to reverse on that day. So we look for the market to reverse, and sure enough, we get back up to the Kijinsen again. All right, and then the market moves a little higher. We broke this fractal here. All right, and then we pulled back. With that pullback on day 26, I'm looking for the market to move higher now because we pulled back the Kijins and we have a little bounce off of that level. So at least I would want to trade to this point if I'm going to trade, because we always want to get past the level. So we want to see if we could get to that level at least. All right. And so we got to that level. So we had a little trade. So with this trading this time theory, you're not always going to be in big giant moves, but you'll be in trades where you could gauge where you want to take profit, because it's going to be basically to a support and resistance level. As you saw, we went from here to the Kijinsen. Then we went from Kijinsen to a support and resistance level that we had previously. So a lot of times it may not be that big move that you're going to get, but I mean, sometimes you'll catch a very big move, but it's going to be that consistency. That's what it's going to be. All right, so we're going to move that off the table now, and we're going to see what the market does here. So we gapped up, and it looks like on day 32 and then day 33 we dropped like a rocket, and we would have never caught it that day if we're waiting for it that day, because that day it dropped like a rocket. All right, so on that gap probably would have misled you, and also you would have looked at, maybe you would have looked at seeing you still had that support and resistance level here. So that level was right there. You have this level, and I like to put zones. You can see it gapped up. It's probably been a hard trade to really figure out. All right, so you're in that zone, and the market just dropped like a rock off that level. So day 33 we dropped, and we dropped even more. Now what I'm looking at is, if I did catch something from this point, and I wouldn't have known that after day 33 we see this big candle here, we probably wouldn't be thinking about getting in the market. We find support here. Well, Ichimoku cloud is based off of two levels of support, not just the top but the bottom also. So the market moved down to this bottom level through that support there. So we found support down here at this lower level. So we make it back to day 42. All right, day 42, I'm probably going to look for the market to drop. I'm probably playing the downside because we got a TK crossover that's bearish. I mean, we got some angulation to the downside. Let's see what happens. And the market moves higher. So day 42 didn't really work out too well for us. You could see really it was in the middle of a move. It didn't really do much, and the market went all the way back up to that support and resistance level, guys. That's very important. So we'll play it out. 51, we're on day 51. So I'm looking for something to happen. I mean, I see some rejection here. So we should be seeing maybe the market drop to the downside, maybe to this point. And then we see the market did fall to the downside. Looks like it's not going to reach our level based off of looking at these candles. So it looks like it's stalling here, but let's see if it'll get down to this level, because you got a flat Kijinsen, guys, and that's a big gap there. And the market moves higher. We broke off of that flat Kijinsen. We broke this high, and the market continued to move higher. So we fell a little bit on day 51. We didn't fall that much, but we did have a drop. It was just a pullback. You could see that the market's strong now to the upside. You got a pullback. That flat Kijinsen and Tenkan-sen pulled together. This would have been a trade that we would have lost looking at rolling the dragon, because basically we would have been looking to trade back to this level, at least back to somewhere in here, but it pulled back to a little support level. But the market did pull back on that flat Kijinsen, but it didn't pull back to equilibrium. All right, so you would have probably lost that trade. I mean, you would have made some profit, but probably would have got taken away from you as the market went right back up above that level again. So we'll play it out to this last level here and see what happens on day 65. 65 sitting right at support of the Kijinsen, and probably look for the market to move a little higher. And it moves right off of day 65 higher. And the market moves a little higher. You would have made a little bit of nice profit here. I would have probably at least thought we could shoot to this level, because I always go to the next support and resistance level or look for a level. Then the market continued to move, and you would have played this off of this level here. You still would have been sitting in the trade. And then now looking ugly taken off and gone to the downside. You would have had some nice profit here. Would have probably, yeah, you would have been out here because you had a big drop to the downside. But you could see where the market moved higher for you right off of day 65. So we worked on almost every number. We worked here. We didn't really work here. I mean, we pulled back a little bit, had a nice little move, pulled back. We had this move where we moved higher. Day 42 was a day that didn't really work out. 33 worked out really well. 26 was a slight pullback, and then 17 moved. It was a nice move off of the bottom bounce of the cloud up to this point here. And then day 9 was a nice little move again up to this point. So you had a couple good moves off of these levels here. So I know you're not convinced enough because I'm going to have to show you some more, right? So let me show you another chart. We'll pull up some more charts and look at it, and then we'll go back to the drawing board and figure out what is really happening here. But guys, this is real. This is what a lot of Japanese traders are trading, and you know, they're doing things that we're not doing. All right, so we're going to start doing these things, and we're going to start doing them precisely, and we're going to get great at them. All right, so what I'm going to show you is a couple more charts. So let's go back and look at some charts. And also I want to show you more ways of trading with this. There's more than just one way of doing this. All right. Now you can mark your numbers. You can mark your charts anywhere. You know, you could gauge it from here far out. You could gauge it from here as far as possible. And you could double the numbers because now you could do stuff like this. So if you have a number here and then you start from here and you find that this is an Ichimoku number, or this one is another number, or you start from this level. So say we started from here and we said basically we go to a point and we see that another number is also a previous number. So let's see where we would find something like that. So not really finding anything. What you want to look for is numbers that have double numbers. So if I move it off of a chart, if I look at this point, I already looked at that. Look at this point and go to a number. This 26 has 11, so it's not a number. This 33 has 18, so 17 is our number. So this is pretty close. So I would put 18 with the 33. So you see that 33, I would put an 18 there. So I know that's also an 18 day. All right, because it's not just going to be, we could base it off of a lot of things. So I will go to this 42, see if it's another number. So 42 would be another number. So 42 is going to be 26 and 42. I would put it as 26 because you could put it as 27 because it's one day ahead. So 42 and 26, you have a double number here. Really, that's supposed to be more confirmation. Now on this here, you could see 42 or 26 wouldn't have worked out. On this one, it kept moving to the upside and just blew right past. But if you confirm there's more than one number that lines up with this, it gives you even more confirmation. All right, so I just showed you what I was doing. That's one of the things that you could do. Go from other numbers, go from other swing highs and swing lows, go from these fractal highs or fractal low, take it to another point, because we already used this. So we could come back here and then use this level, see what we got. That would have been a 13. That's a 22. No numbers, no numbers, no numbers. But that's what you do. Basically, you want to see if you could find numbers that match. Now this drop here would have been 6. This over here would have been 18. That would have been a good little point, but it's not. We didn't mark the same levels. All right, so I don't want to get tons of lines on my chart, so I use one set of this. That's basically what I do. I'm not going to start here and put more numbers, more lines. If I do, all I'm going to do is mark a number and say I'm not going to put more lines on my chart. I'm going to keep the lines that I have. So, and I'm just going to use that into the future. All right, so when we get here, we keep going into the future all the way up to, well, I like to stop at 129. You could go up to 226, but that's what we're looking at. So let's go look at some more of these charts, because I know you guys don't believe this, because it's like, why haven't we been doing this? It's too good to be true, right? So let's see if it's real. Let's see if it's real against another chart. All right, so we're looking at another chart, but we're looking at this chart that's still, because we want to just show a couple of things. First of all, you could see where I started this count from right here. And daily time frame, we got 9 here. On that 9, we had to move. Price moved higher. Probably not a trade I would have taken, because you see which way the trend is. You got a TK crossover that's bearish. So then on 9, we did have the move, but probably not one I would take. Then we have 17. Well, the market reversed on 18. Probably another one I wouldn't have taken, because I want to trade with this direction. So I know I'm trading a pullback if I do trade that. Now I could go down to my lower time frame and get into a trade. Now down here we had 26. We had a slight move to the downside, but the market was going pretty much sideways here. You could see what we were doing on 33, and then 42 was one big candle with mostly news. And then we had 51. On 51 we dropped, because the next day we pretty much went a little higher, but we never broke this high right here. So we consider that still a move to the downside, because we never broke the previous high here. That's where you want to always have your stop loss. So this is one I would have looked at taking, because we had resistance from the cloud, so the market moved down. Then you had this move here, which was 65, and the market moved down to the downside a little bit. All right, so another one may be probably taken. You're probably definitely looking at support and resistance. You want to throw those on your line, on your chart, because you would have been looking at that to catch this trade. All right, because you want to see that support and resistance. You're inside the clouds, the market drops, you would have caught that trade. So there was a couple good ones on here. And now what I'm going to show you is how do we calculate where the market's going to be. All right, so we have our sideways, we have our vertical levels, right? Now we want to put a horizontal level in there. So there's waves. The waves are going to count. We're going to count the waves, but we have to do some multiplication and addition and stuff to that nature. So what you have to do, we're going to have 3 different waves here. So the N wave is going to be based off of A, B, C. So what happened, you go your low of A, your high of B, and then your low of C. You're going to have to do some math to get those numbers, and then put this into the point where we are here. So let me show you really quickly. We'll count those numbers. So the first wave I'm going to look at, we have a low here, which is A, your high again B, and then a low here, which is C. So this low on A is going to be 104.512, and then this high is going to be 107.482. In order for me to find that N wave, I have to say B minus A plus C. So B minus A plus what I have at C. So you're just using your highs and your lows. So you use your low, your high, and your low. And I should have drew them on here, but my low, so it's going to be, again, B minus A, because this is A, B, C. So B minus A, all right, plus C. So my B is 107.482 minus A. My A is 104.512. And you take those, subtract it from each other, and then you add this number, your C. Add that with what you just subtracted and got to your C, which would be 105.240, and that'll give you your N wave, which is 108.210. So then your V wave is going to be, it's going to be B minus C plus B. So my B is 107.482 and my C is 105.240. Subtract them from each other. Whatever you get, add to your B, which my B was 107.482. So you add that, and that'll give you that V wave. All right, and then finally for the N wave, the N wave is B minus A, B minus A. This is the easiest one. B minus A. Whatever you get, you add to whatever C's low is, and then that's going to give you that wave right there. So we don't really have to get into that right now. I was just giving those to you, and we're not going to really have to get into that. What you really use this for is calculations of where your targets are if you got into a trade right here. So if I got into a Kumo breakout, quite naturally I'm going to look at this point, because you don't never really take this point for granted, this double top here. So that would be a point where I look for profit probably. But if I get through that point, then the next leg I'm going to look is going to be my N wave. And if I can get through the N wave, I'm going to look for the V wave and then the E wave. And you never know what the wave is until you get to that point, really. I mean, because you don't know if it's going to stop here, here, or here, or here. But we have some choices. So if we were trading, we could even figure out the day how things are going to look on that day if we just do this. So even if I'm not in a trade, first thing, if I'm not in a trade, we know that maybe the market's going to be there on that day. It could be here. It could be here. It could be here. All right. Now, it doesn't have to even be like that. It could come way over here to that. It could be over here, or it could be over here. All right. I wouldn't suspect maybe it would be way over here. But this is where you're going to start looking at your targets. So maybe I said the market's going to be there. All right. If not, maybe I think I'm going to look at the market being, let me see, cancel that. I would say the market would be maybe to this N wave right here. All right. So that's what I'm looking at. Maybe when the market gets there, that's where I would take my profit. When the market got there, I would take profit. Now that could be like this. It could be days later. It could be, instead of being 76, it could be the 83rd day and there. But you're not really looking at days here. You're looking more at where price could be if it's going to make that wave. Now that's just, again, that's just for adding for your price targets, your targets if you got into a trade. So if we got into a Kumo breakout right here, then we know where we want to shoot for. All right, so I leave those on my chart, and that's what I'm going to shoot for when we see this breakout here. Because when I see this Kumo breakout, I am going to trade it to the upside, and I'll probably take this trade right here and then trade it to the upside and then see where we are. All right, so that's how you're going to figure that all out. All right, guys, so let's continue to look at some charts, look at some things, see where we stand. Make sure you guys know this and can trade it and understand it, and then can start making it work for you, because it can work for you, but you just have to be patient traders now. You can't be fast, reluctant traders. You have to be slow, patient traders, looking at things, analyzing, putting thoughts together, putting your plan together, putting levels together, looking at where the market may be. All right, so I have those lines there just to see where the price targets are. And they're not targets for me to trade. They will be targets if I was getting into a trade. So I just jumped into that part. That's going to be more on our wave analysis on the next unit. So we'll continue looking at the basically our time theory here. All right, traders. So we are still looking at some charts. I want to look at how to trade this rolling dragon, as it's called. Pretty much we call this a C-clamp, and it's called a rolling dragon also. So if we're trading this C-clamp, basically when we see this C-clamp, we see this tight move angulation with Tinkinson and Keejensen, and they're pretty tight together. All right, and then I'm using this big news day as my candle. So I use this daily news day, which was huge, and I put this as my starting point to start my count. So when I've done that, when I look 9 candles into the future, that takes me to this point here. Well, that's relevant to me because let me show you. If you have your count down already and you have your time down, your time analysis lines marked out already, then you will be able to see that when things happen, if they line up with your time analysis, then that's a good thing. That's a good trade to take. That's a good opportunity for you to get into the market. All right, so down here I didn't even mark support and resistance levels, so we could go see what's down here if there's any, and I don't see anything in the immediate area here. So I'm not gonna go all the way back to search for anything. Alright, so let me go back to that point. So starting back with this point again, you could see again I was talking about the angulation here and how price moved down and how it went down to this point. Well, when Kijinsen here flattened out, the next candle that it flattened out on was the 9-period candle. It flattened out on this 9th day. So pretty much let's see if it flattened out on the 8th day. It wasn't flat on the 8th day. The 9th day it flattened out. And when we get that flatten out here, now we want to be able to look at trading because the market is flat here. You can see Kijinsen is flat. That's not going anywhere. So on your 8th day, on your 9th day, the market was projected to move higher. Well, you had a fractal the day before. You wouldn't have known that till this day. But what I've done, and you could see the rejection here also. And then you want to see that price is moving above your Chiku span here. That's a good thing to see because that's a sign that this is a little support. The market's going to move higher quite possibly. But another thing that I like to do is this. The candle that we were supposed to move higher on, or any of those candles in that area that has the low, are for trading inside of a candle. I want to mark that candle. So I would mark this area. Alright, make it an area where we do this, so we make sure we see this. I'm going to mark that harder. Okay, so now you could see we boxed the market in, and if you have taken the course, you know all about boxing the market in. So as we box the market in here, we never broke this low. This was the last low. So before Kijinsen flattened out here, we had this low. This is the lowest low before Kijinsen flattened out. And we were flat here and the market pulled down, kept going to the downside. Now you're really flat right here. And this was on your 9th day. The next day, the market appeared to start turning to the upside. So if you were prepared, what you would have done more than likely, you're not sure of this 9th day, but you could see that the market violates a previous high of the previous day and closes above it. That's a good sign for me to get into a trade. And I myself would put my stop loss down here. Now my target is definitely going to be to this point. Now what happens is the market doesn't get to your target. And what happens, you can see when Kijinsen starts coming down, then the market's going to pretty much, if Kijinsen starts coming down, then the market's pretty much holding here and you're going to take your profit. All right. Now if Kijinsen stayed flat, I would expect price to move back to Kijinsen, but Kijinsen didn't stay flat here. Now I don't know how long you would have been holding your trade. Let's see what we would have had here just off of the break here. This has been a good 300, almost 500 pips here, and if you sat around, you'd have probably ended up with around two something. All right, so it would have been a good trade, and you could see what happened coming off of that 9th day. Now looking at the other candle, at the other points here, the days of our time zone are 17, not much happening. The market's still flat. Then on the 26th day, a slight reversal. Right here we had a nice little reversal, but we didn't hit anything on the 33rd day, and we're going into the 42nd day, and now we're way up into the future here. So what I'm looking at is a lot of things. If I ever see the market move up to a point where I have resistance on that day, as I mentioned before, so let's draw that out. If that market ever moves up to a point, and then say it comes up to this point here, and I'm at resistance, most definitely I'm going to sell that market. All right. So it's even the same thing here. I mean, I don't think you'll see it like this, but if you came up to that point, you have resistance here. I'm going to sell that market. All right. And even like this, much like this, you could use your own support and resistance that you draw on with your tool. Whoops. Let's do this. So we have to mark this level, and it could even be this level. I mean, you could be here, but it's the general area where support and resistance is. So trading with our time analysis, we want to still use support and resistance. We don't want to stop using support and resistance. We want to use that Kijinsen, that cloud, the horizontal lines, because what you're going to get is if you get the market moving and it moves up, here it comes back down, retraces a little, then moves up, and it hits this resistance point. Do you believe I am going to sell that because we hit that 51 day, and I'm going to sell that all day long? All right. So that's what you look at when you see a support and resistance level. So same thing if we were looking at something like this. In the market we saw support. This was a support level down here. And now when the market moves, say the market comes up, retraces, comes up, and then maybe drops and comes down to that point, and it's in this area where my 51 day is. If it went down here on day 52, I'm still going to trade that, because what I'm going to do now is this. I'm going to put if the market goes below that level, I'm going to put an entry here where the support and resistance level was, and I'm going to watch the market come right back up to it and trigger that trade, and then I'm going to let the market continue to move. Alright, so that's some of the ways that you want to be able to trade this. So I'm going to go to some charts that are going to really be moving to show you how to really trade this and how to be successful, because these numbers, these time theory numbers, are outrageous. So let's go back to look at some charts that are moving to help you better understand. Alright, so I want to look at these again with some market moving a little bit to see what we have going on. So I'm going to start with this very last fractal, this bull fractal. You could start with any of these fractals, and I'm going to mark it. You could start with a bear fractal if you wanted to, but you start with one of these fractals. But I'm starting with the last fractal because I'm going to move off into time. So this is what you do on your chart. Your current chart, get the last bear or bull fractal, mark it in time. You could even go back a couple fractals, mark it, and then make sure you extend it into time. This is one of the most basic ways to trade with this time analysis. So we're looking at this, and we can see the market's in a nice trend to the upside. So let's see what the market does, because we have our 9 period here. So we're going to see what happens when we get to the 9 period. So on the 9 period, before the 9 period, on the 8th day, what did I have here? This is a nice hangman. All right, so with that hangman, I would probably be looking for the market to drop to the downside. But we don't know what the market's going to do, so we don't want to just go placing a trade because we think the market's going to drop to the downside. All right, so what we're going to do here is we're going to box the market in like we do. So we've always boxed the market in, so we want to box it in and let it tell us which way it's going to go. So if the market closes above this level, more than likely it's not going to stop here on our 9 day. But if it closes below this period here, then we're going to be into the trade, and we're going to look to trade at least down to this point here where the Kijinsen is. Alright, so let's move and see. And it broke above, it closed above, I would be done. I wouldn't even be looking for a trade anymore. So that wouldn't have worked out for us on day 9. So day 16, I suppose, this is 16. So on day 16 and 17, let's see what we have here. Alright, so on day 16 and 17, here's 16 and here's 17. 17 is our Ichimoku number, and we're allowed to go 1 day prior and 1 day after. Alright, so looking at that, you could see we're sitting right on the Kijinsen, and the market is in a bull trend to the upside. Alright, so if I'm sitting on Kijinsen, what am I looking for, guys? I'm looking for a Kijinsen bounce. Everything is lining up for me because my 9 day time theory my 17-day time theory is lining up perfect with my support and resistance level. There's no way I'm not going to take the trade. I'm going to take the trade, look for price action, and then I'm going to enter the market. So I probably go to a lower time frame to enter my trade here. So what I'm going to do is box the market in first of all. I'm going to box that in. I don't want it to go any lower than that point right there. So I could go to the 4-hour time frame now. The day closed. I know what I'm looking for. So now I'm going to go down to the 4-hour time frame, right? Let's go down to the 4-hour. We'll stay on the one on the daily. It's not switching for me for some reason. So we still can look at what we're doing here. Basically, we want to be looking at trading on this point. So let me move in. You can see what happened on the next day. So day 17, we got bulls into the market, and day 18 we moved higher. Now we're still trading inside of this candle, so I definitely want to get to this point at least. But we already had the bounce on day 17. And then look where day 17 took us. Now where do we most likely want to look for our target? At that point. And we bounced right at that level and moved further past that point. This is one of our wave counts we would definitely do. But I don't use the wave theory pretty much. I like to use Fibonacci expansion levels. But this looks more like an N wave. So it'll probably look like an N wave to me. It would be something like this. That's what we're looking at, right? Pretty much looking like that's what it would be. And it's an N wave based off of how far it extends off of this leg C, because you have A, B, and then your C leg. You don't know what kind of a wave it is until it ends. And if it ends right there, that's pretty much an N wave, pretty much, because you can see how far it's extended. You could have a wave here. You can have this level here. So it's different waves are going to be at different levels. All right. So your N, your V, your E, and then you have this S fluctuation, which is basically just a support level based off of this B point. You want to get past that B point. All right. But that's talking more for profit targets, because when we got into the trade down here, we want to know where our targets are going to be. So from there we start using, once we get into the trade down here, so we decide we're going to get in the trade here. Now we start shooting for our targets. Our first target would be here. We need to break this point. This is going to be B. We already have our A. We're already pulled back to C. And now we need to break this point. That's your first target. If you could get past that target, you go to your next waves and you start calculating where your wave levels will be. And then you have each wave level, and then wherever price ends up, maybe that's where you take your profit. All right, that's how you play the waves. We're going to get deeper into the wave patterns and how to calculate waves and looking at waves on the next video. But waves aren't going to be a big part of what we do here. So we're going to continue to move. So let's get moving again. So we're looking to see what's going on for day 26. And what happened here? The market did drop, but it was 2 days later. So the thing that I look at, on that day it's supposed to drop, and you always want to look at it like this. We were supposed to drop here, all right? But this is the high right here. So you always want to box the market in, because that's how you're going to know what to trade. So we box that market in. We're basically trading inside of this green candle here. But I want to make sure if the market goes higher than this high, even if I'm a day late, 2 days late, 3 days late, it still has to go above this high to go higher. If it goes lower than the low, then more than likely we're going to the downside. So we closed here on day 26 lower than the low of the previous day, and of the previous 3 days. So we made a new low, then we continue to make another low. We made another new low. All right, but we had some bulls in the market and closed right back up inside of this candle. And then we had some indecision. Looked like we had a nice big engulfing candle right here. And then the market dropped to the downside. You could have been prepared for that move if you would have just boxed the market in. Now, if you expect the market to drop on this day, all right, based on wanting the market to drop, and this day, which is 27, it doesn't drop, and then 28, you're getting this kind of motion here. You got to stay with your trade. You got to stay with that trade, because look at here, it's making new lows. All right, you can see those new lows. Let's mark those. It's making new lows. Every low is lower from this point. All right, so that's one thing you're looking at. It's never broken this high. That's another big thing. So you want to stick with your plan. And then the market drops and continues to drop. Now I would have looked for profit here at least. Now my first target would have been way back here. Kijinsen would have been my first target. Now when the market blew past Kijinsen, we know with a big candle like that what the market is doing. If the market blows past Kijinsen like this, it blew right past your support level. So when you see a big candle like this blow past your support or resistance level, more than likely the market's going to continue moving lower. And it did move lower, and it moved to the next support level, which is the top of the cloud. This is where I would have definitely taken my profit more than likely. Then you could see, let's see what the market does. Day 33, we're approaching that. Day 33 probably would have been looking for the market to move higher. We're sitting on support here. But when you're sitting on support, if you say the market's going to move higher, it has to break a high to go higher. So pretty much we need to get past that high. We are at a strong support level. Let's see what the market does. The market goes even lower to the next support level, which is this cloud here. And then you can see we flattened out here. Now with that flat market here, this brings us to, again, this rolling dragon. Every time I see it, I'm going to talk about it, because that rolling dragon is this. When you see the market with Tenkan-sen and Kijinsen squared up tight like this, and the market fall way down past Kijinsen, you're out of equilibrium. You're no longer in equilibrium. All right, and the market always wants to try to get back to equilibrium and then leave again. All right, so there's a whole bunch of signs that would tell me to take this trade to the upside, because we have a flat Kijinsen here. We just broke off of a TK cross that was tight together. We made this low with rejections at the bottom of the cloud. So with those rejections, what I'm going to do is again box the market in, and I want to trade that level. And I want to try to trade to the cloud here or to Kijinsen here, because the market wants to get back to equilibrium, right? Now if Kijinsen starts coming to the downside, then more than likely we want to get out of our trade. But when you see this big C clamp, look how far away. There's so many signs here. First one is that it's really tight right here. Then your next one is that Tenkan-sen and Kijinsen are super far apart. They don't like to be that far from each other. They're married to each other, and when they get too far apart, they want to get back together. They're going to try to get back together. We're sitting at support right here, cloud support, the last level of support. We have so many signs telling us that the market's going to move back to the upside. So we're going to take the trade to the upside, and definitely we'll be in the market here. And then the market moves to this level here. I'd be starting to wonder if it's going to get past that point. Day 42, you might think it would drop here because we're bouncing off a lot of resistance now because we're below those levels. And then the market just blows right through that level. All right. So now let's see what happens here. All right, so day 51, we would be expecting the market to move to the upside. All right, but we got, yeah, because we also have a TK crossover that's bullish. So that's what we would be looking for. Now, these candles are so small, it'd be hard for me to just really box it in. So let's see what it does now. It dropped to the next day. So what I want to see if it's going to violate this previous high here. And it doesn't. It makes a new low. Then it looks like it's trying to reject that cloud level. So we didn't get what we wanted on day 51. Day 51 wasn't even affected. It really didn't even do anything for us. And then the market just went a little bit sideways. And we'll go to day 65. Day 65. Market continues to drop. We didn't get anything on day 65. So that's going to be it. I mean, the market dropped the next day. Day 65 we dropped, but we dropped before 65 because we started dropping on 64. So when you're back here, you have to be aware of what's going on here. But with 64, with day 64, you do see you're at this flat Kijinsen, right? At the flat Kumo, sorry. You got a flat Kumo top. And with that flat Kumo top, when the market moves to this point, you could see maybe you're thinking about the market moving to the downside. And then if you waited for that next daily candle, it was probably a trade you wouldn't have gotten into. It would have been kind of hard to judge this one because on 65 you were way far lower than you wanted to be. You know, you wanted to be in the range here, but you weren't in the range. So this would have been really tough to catch. But always make sure you see those support and resistance levels whenever they line up near your trade, because we came back to that point. So I should be aware of it. Everyone should be aware of it. The market moved back up to a support and resistance level. Boom. That lined up with our number. When we see that, we should expect the market to drop. So we probably want to go to the lower time frame, mark this high. All right, so you always want to mark that high of the day. This candle closes right here. You want to go to the 4-hour time frame. This wick is long, so I like to get below the wick to trade, but this is a long wick, so I just go to the 4-hour time frame and try to catch my trade. And if it definitely closes below this level, then I'm happy. I'm going to continue to trade. So if the market is a day early, like this one, really we were already dropping on day 65. We still have to be prepared for that, but we also have to know where our support and resistance levels are. So I would have probably thought the market would go somewhere like this. I would mark this level. Then I would mark this level. Pretty much want to mark that flat top right there. And then see what the market does. It kind of bounced on that level there. Then it went right through that level. Then the market continued to drop. And you could see that would have been a good trade for us if we were able to catch it. And then again, you could see another. This C-clamp is big. I like when you see Tenkan-sen and Kijin-sen touching, basically. So we almost have another walk on the dragon trade. You got your Tenkan-sen here, and they are really tight. I like to see them right on each other. All right, there's some room, some gap in here. But the big thing is how far they get apart, and then how flat this goes. When this gets flat, then start looking. You have rejections down here. Mark this low, and then try to trade up to Kijinsen at least. All right. So you could go to your lower time frame, like the 4-hour or the hourly, to get into a long-term trade. You could even use O and G off of this. You go down to this point here. You start flattening out with your Kijinsen. All right, so once you get a flat Kijinsen and you got the distance that you do, then you already see the rejection. Then more than likely this is the candle right here where we started to realize the flatness. So we could go down to the 4-hour time frame. We go to the 4-hour time frame, look for price action, and then trade to the upside. Now we would put our stop loss right at this level. A little bit below that level. Then we want to trade back to equilibrium, right? That's where we want to trade to. market went right to equilibrium and went farther than that. All right, so that's going to be it right there for that. So that's pretty much time theory. You can see how we use it pretty in a variety of different ways. So we'll go over a couple more charts and then we'll end this and move on to a couple more slides, and then we'll get into the wave analysis. So let's look at one more chart. Okay, so you can see again we're starting on another fractal, the last fractal, and we're going to move into the future and see what we got going on. I marked from that point, so when you see things happening, you have to keep your eyes open and kind of see the whole picture. Don't just look at this and say it's going to drop here, because if we were suspecting a drop here, nothing is automatic. It might not drop that day or 2 days, but maybe within that time period in that area it's going to drop. All right, so you got to keep your eyes open also. So let's see, let's watch. So we're on that candle there we started. We're going to go to the 9 period. So the 9 period, there's really, I was looking for a move to the upside here, but we got a fractal here that lets me know that maybe we're going to see higher prices. And then now what I'm really looking at is we were supposed to drop this day. I mean, not drop, we were supposed to move higher because we moved up, we moved down, made that fractal, we were expecting to move higher. Okay, so the market, we were expecting to move at this point higher, but we're sitting on support and resistance. All right, so sitting on that support, I want to box this market in. Now I could box it in a couple ways. I could box in that little red candle, or I could box in what that green candle was, and if it closes lower than that green candle or higher than that red candle, I know which way to trade, and I'm right off of this level, and then we get a close above. So the 9 period alerted us for a trade to the upside. And now again we're sitting right on this level on day 17. Looks like we would expect the market to move higher. So day 18 we have an inverted hammer. I'm going to mark it. And if we could close above that, I'm going to trade to the upside. We close below it, I'm pretty much done. We close below that point. So I don't want to trade if it closes, makes a new low on me on the next day. All right, definitely don't want to do that, because that means the market has some momentum to go to the downside. Now day 26, we're approaching day 26. I want to be looking for the market to move higher. We already see some bulls coming into the market, and we're already at a support and resistance level. So the support of the cloud is hindering the move to the downside. So I want to mark this. Okay, so we're inside this level here, pretty much like that. So if we make a new low, more than likely I won't want to get into a trade here. Okay, so now we're sitting inside this candle, so definitely I want to trade if it goes above this candle. If it goes below, then I know we're going to continue to the downside. All right, so now we're still sitting inside this candle 1 day later. So this was where we were supposed to see our move to the upside, and we haven't seen it yet, but we never broke a high. We haven't broken this high or this high low. So we're inside of this candle. We should still be focusing on our trade. Still the same thing. I'm going to stick with my analysis because we didn't get any move yet. And then now we got a move. And actually it was the 3rd day after. So I don't get rid of my analysis based on just because that day or the next day it doesn't happen. I'm also saying if it doesn't break a previous high or a previous low, if it stays inside of that candle until it breaks one of those levels, then it'll tell me which way it's going. So yes, we were looking to move higher off of the 26 period, but the 26 was stuck inside of this candle, and it was stuck inside of the candle on the 27th day and the 28th, and then finally on the 29th day it broke above. All right, so you could see pretty good opportunity. On 33 we would be prepared to go to the downside, then the market shoots up, moves to the upside. Okay, so you could see on day 42, same thing. Day 42, we should have been looking for a trade because the market didn't close. It was in between this candle on day 42. So if we were continuing to move higher, because we had to pull back here, which was a little early, so we were like 2 days early, but we stayed inside of that candle for 2 days. And then finally the market moved higher, moved outside of that candle. And then day 51, you were expecting a market to drop. We're in a strong trend here. And that market doesn't drop. And then day 65, and the market doesn't drop that much. It doesn't really drop at all. And then we continue on to the market moving. So many other trading opportunities here. You could see some nice bounces. Tinkinson is going to be your main man following that trend. When you get a strong trend like this, you want to continue to follow with that Tinkinson, because basically we got a TK crossover here. With that TK crossover, we never had price close inside of Tinkinson and Kijinson. Here you did, but we came outside of that level. So let's look at this other opportunity also. I'm going to go over this. I already showed you the rolling dragon, which is basically the C-clamp, but now we want to still again look at the walking dragon, and we talked about it before, and I'll talk more about it. So we're going to back it all the way up, and we're going to still keep the time analysis on our chart. And I'm going to show you how you could look at this time analysis with the walking dragon. So if you already have this on your chart, you have this your time analysis on your chart, you have your lines drawn, then the next thing you're going to look at is this. Alright, so we got a TK crossover. We got one right here. This was the TK crossover right here. Alright, so now let's count candles. 1, 2, 3, 4, 5. 5 candles before we came back inside of Tinkinson. Now I call that's the walking dragon. When we pull back inside within 5 to 10 candles, and sometime it doesn't have to be exact like that, but within that area, the market pulls back inside of that level. Now you want to look to trade outside of that level. So now I'm going to look for a good trading opportunity based off of this. All right, you can see what happened. We pulled inside of that level, and now we want to look to move to the upside. All right, so we're looking to move to the upside. We got indecision here, so I'm going to trade that indecision candle. And you could also, there's a couple ways you could trade this walking dragon. First of all, I got indecision, so I'm going to try to trade that. Second thing I could look for is, we do want to see if we come all the way back to Kijinson. All right, and then the next thing is, if I close above my Tinkinson, I could trade any of those levels or scenarios. It gives you a wide variety of levels or areas where you can trade, knowing you're going to trade to the upside. Now, with that also said, I'm going to delete these lines so we could see what I'm talking about. I do want to trade that indecision, but our trading day 42 is here also, representing that we're looking for the market to move higher. So everything is telling us that the market should move higher, because we got that walking dragon. We got 5 candles after that. We pulled back inside of Tinkinson. So basically, when we get a TK crossover and then the market pulls within 5 to 10 candles or in that area, could be 4 candles, could be 11 candles, pulls back inside of your Tinkinson, then you're looking for the market to that's just a pullback and then move higher. And this is a reason I don't trade TK crossovers, because a lot of times you get a TK crossover, the market likes to pull back and then go. So that's why I like to wait for a pullback to my Kijinson or wherever. So that's what we're going to be looking for here. That's why I don't trade the TK crossover. So therefore, once the crossover happens and we get the pullback, then we could trade the market. So we're going to put that on here. That's on here. I'm going to trade this level. All right, and so we blew past that point. Soon we blew past that. This is our level here. We enter the market here. We could enter the market here. My stop loss is below Tinkinson, or below Kijinson rather, and right at the cloud. So you could see what happened. The market moved higher, and then that would have been a good trade. So now you just follow this. There's a couple ways to exit your trade. One way is if you close back inside of Tinkinson, because you're losing momentum. That means you're losing that short-term momentum, and here you lose it because you get a pullback. But that could be one way, or else if you get another TK crossover. I don't want to wait for the TK crossover because that's going to take away a lot of my profit. But if I get a close back inside of this Tinkinson, and especially on a move like this, I'm already moving to the upside really well. So I didn't get a close inside of here. We gapped down here, but we didn't close in here, so it opened up in here and moved higher. I stayed with the trade until I close below that level. I'm staying in the trade. Now if you wait for the TK crossover, let's see what happens. So you got a very good trade running for you, and that's just following Tinkinson. You can see how well Tinkinson covers for us, and now it looks like we're losing some momentum, and then we did lose momentum. We started to lose a little momentum. We start poking through here, starting to flatten out a little bit, and then you could see we closed here. I would have exited the trade here. Would have had a beautiful trade, and that's on the 4-hour time frame. I mean, sorry, that's on the daily time frame. I'm moving with the 4 hours expand. This is the daily time frame because we do all of our analysis on the daily time frame. So when we do our analysis and you see our 42-day count, our 65-day count, that's all daily time frame stuff. I'm so used to messing with that 4-hour time frame, but we're on the daily time frame, and we closed inside there. So I wouldn't be looking to trade again. And I'm going to teach you another trading setup that looks just like a waterfall. But you can see how the market falls down, and after you get that TK crossover, you could have got out here. So that would have been another way to get out, but I get out when the candle closes inside that level. So we would have made some very nice profit on there. So there's how I look at trading, the time analysis. And I really don't know if there's much more to show you about trading, because basically you still use support and resistance levels. You use everything we have, but now you have a target date where that stuff is going to happen. And if anything near that time happens, you take the trade. All right, so like this 51 here, we had 51 here. Let me move it over here. So you're looking at the 51. Let's suppose that 51 was here, all right, or here, or here. You could see that if 51 was there and you were supposed to get a pullback and it pulled back to that point here, I'm trading the bounce off of this level. All right, so maybe 51 was the pullback level, or 52 could be the bounce level. Whatever it was going to be, I'm going to trade this level here. You got a nice indecision candle, a nice rejection candle off of Tinkinson, and then you move to the upside. So just those levels where the market comes back to a cross level with your time frame analysis is a major thing. So continue to use your support and resistance levels. All right, so I think that's enough examples. We need to start looking at this. I mean, because you basically can put these lines anywhere on your chart and you're going to get the desired effect. And when I say anywhere, I'm talking about a fractal high or a fractal low. You could start it anywhere on any of those levels. I like to use the extreme levels pretty much, but you could use any level. You could start here, you could start here, you could start up here. You could start here, you could start here. It's going to be the same thing. You could start here, all right, and then you could work into the future. And as you work into the future, that's what we're shooting for, where those levels are going to show us where the market may turn to the upside. So if I wanted to shoot for the future here, I would start right here, and then I would go from that point. Now remember, nothing is precise here, but it's always going to be within the next day or two or so. You know, you don't go 2 days, but if it doesn't break a high, then I stay with my analysis, or if it doesn't break a low. You can see here, I put this anywhere, right? I just put this on the last can back here. I didn't prejudge this. I just put it at a point. And then you can see what happened on the 9th day. we were supposed to drop, and we dropped. Look at, you dropped all the way down to the cloud here. Would have been some nice profit, and then you were supposed to bounce on the 17th day. You bounced on the 17th day, guys. I just put this here just because I wanted to show you guys that you could start anywhere. All right, so you go from the 9th over to the 9th, and you could see the market dropped, and it dropped to the downside. But see, we would be afraid to take the trade because we don't know how far it's going to drop and all that stuff. So it's like there's so many things that talk you out of a trade. Your mentality will get you out of a trade. All right, but you could look at levels to trade to. First of all, you have a horizontal point right there, and you could see the market came right back to it. But if I didn't have that level, you always got to put levels where you think the market could go to. It could go to the horizontal level, right? And you could even say that's a support and resistance level because it's support over here, it's support here. So I could say if I trade here with a flat Kijinsen, a lot of times the market's going to do this. Let me show you so you understand a Kijinsen. Number one, we could have looked at our trade coming down to this point, to the red line here. And number two, we could have looked at it coming to the cloud here. The cloud's support level. The cloud is a support level right here, and it held support. You could see how fine it walked on support. It was like a fine-tooth comb. It just walked right on support right here and walked right back up. Right? But when you have a flat Kijinsen and the market's kind of sideways, you hit a support level down here. It doesn't matter. The Kijinsen is flat. You're going to see the market kind of do this through Kijinsen, and then you still have a level up here or a level up here, and you'll see the market do that until it decides to break or go. And then you're going to get a lot of these, count these points here and see how many we could get through before the market really takes off on those levels. All right, because we're trying to catch that big move to the upside or downside. But that's the way I'm trading with time analysis. I'm still using support and resistance levels because on day 17 we hit support down here. If you mark support levels, you'll know. If you have this level up here already, and then the market comes up there on day 17 or day 26 or day 9 or whatever, then you know that that's a good day to take a trade to the downside. Go look for price action on a lower time frame and trade it to the downside. All right, we know what kind of price action we look for. That's what we're going to do to trade this. All right, so that's what I'm looking at. That's all I could kind of think of showing you right now, because this is how this stuff works, guys. It's kind of like amazing, you know, and you'll learn how to use it more the more you use it. I would keep it on my charts. I would keep it on my charts no matter what I'm trading, and then I would start learning how to understand it, learning what I see when the market gets to those points. It's not always going to do something or be something, but it always has the potential to be. And if you use price action, you box the market in, then you'll start to see if it's going to violate. So if you're looking for the market to go higher, just mark the lowest low, and if it can't violate that point and it violates a high, then we're going to the upside. If you're at a high and you're supposed to go to the downside on day 9 here, or day 0, we got this as 0, but if this was a level and you were supposed to go to the downside here, if you can't break this high but you break this low, I'm looking to trade to the downside, guys. All right, so that's what I'm looking at, and that's how you need to trade this stuff. Look and box the market in, look at previous highs and lows, and if the market's between those on your day, so it's like the market's between this point on my day. If my day is saying I'm going to drop to the downside, and then the market does this, I know that it still didn't break this high on my day that it was supposed to. I'm looking for it to go to the downside still until it breaks that high, or when it breaks this low, I know which way it's going. All right, so that's basically it. All right, so that's going to be the end of this. Let me move on to a couple more PowerPoint slides, and then we'll end this, and hopefully you guys have a clear understanding of how to trade this price and time theory. All right, guys, we have a couple more charts we want to look at, and we want to look at some trading opportunities too. Basically some trade setups, not really opportunities, but these are going to be trade setups that you're going to see and try to take. And I'm going to make just a pure video that's going to be the last video of this course. That's going to just talk about the trade setups, which is going to be the rolling dragon and the walking dragon. The rolling dragon is just a big C clamp, basically. That's all it is. And I'm going to talk about trading those. Those are two of the highest powered trading signals that you're going to get with Ichimoku. And then also I'm going to talk about the waterfall trade that I'm going to show you. You'll have to really pay attention to the charts to find this, but it's not something that you can miss or that's going to move fast. That's not going to give you an opportunity to get in. So we'll look at all that, but I just want to look at what we're seeing now, some things that I want to show you, because first of all, I want you to make it clear and understand that this is something that doesn't always work. It's not a guaranteed, bona fide, going to work all the time thing. So just always remember that. And still, you want to always continue to use support and resistance with this stuff. All right, so let's first look at where I located this. I put this again on another big candle that was again, I put it on another news day, and you can see the next news day, after the news day, we went to our 9 period here. So here's our 9 days after the news, and you can see the 9th day the market started to drop. So again, I said that you would look for box that market in, and you don't want to really see the market go higher than this point. So you can box the market in and go on to a smaller time frame and look for the trade setup. All right, so let's do that real quick first. Let's box it in and go to the lower time frame. So we're going to go down to the 4-hour time frame. Now we got to go back to the 9th day here. So on the 9th day here, there's a lot of ways we could get into the market. You can see we have it boxed in, but basically we could have got in on this signal here. All right, because you see you got a long wick candle. Basically we could have got in here too, because this is what we do, is walk this zone up as we normally do. I wanted to say walk the dragon because I'm thinking about that, but as we learn to walk these candle zones, especially the ones with the big wicks, once that candle came up into that wick like that, you should have first had your entry down here, and then as it moved higher, you should have moved your entry up and caught a trade. So you always start with your entry below the wick, below the candle. So you would have been here, probably might have got triggered here if you would have put your entry already, and you would have been in a good trade. It didn't take you out, but you could get a good opportunity if you see the market moving higher and you haven't gotten into the trade yet, based off of where you're going to put your entry. Then you could walk with the zone, and we talk about that. You could walk right up with the market. So if the market moves up to that point, you move your entry here instead of down here. And if the market continues moving higher, you could get your entry up to the midpoint of this candle wick, and that's going to limit your risk here. And you could see you could have gotten to a trade. Now there would have been another trade way up here with a nice pin bar here, and you could see the market, what it does. Finally it drops. Now you can see, guys, these are 4-hour candles, so it takes a long time for this to happen. So you got to be patient with this, because you could see the main thing is the market never really violated this high here, and that's what you want to see. It's not violating the highs, and it made another new high. It didn't violate it, so it's not violating any of these fractals here. You could see that, so that's a good sign. When you see that, then you know you could. What the thing is that you're flattening out here, but you're kind of like angling right here. So let me put that on paper for you. You're angling here, but you're flat here. All right, so you see that, and then the market drops. So basically a descending triangle pattern, and then the market drops to the downside. It's pushing to the downside and pushing to the downside, and then it falls to the downside. So you could have got in there. You could have got in at the break right here. Because that's the whole concept. You could have got in at the TK crossover here, and then there's another way to get in, which is much later here. And on this trade, you would have gotten to the market after you see the crossover. You count 10 candles. Now this would have been much 1 2 3 4 5 6 7 8 9 10 11 12 13. We pulled back in, but we got a bounce. You could see we moved up in here, so you could have got into this trade, but it's near the end of the trade now, so we wanted to catch it way up here. We don't want to catch the trade way down here. We don't know how far it's going to go, and this was where we were looking to catch the trade, and it was basically based off of, going back to the daily time frame, what it was based off of was this pattern that we were looking at. First of all, we knew that we had the 9 days here. But then we also had here where let me draw this out, where Tinkinson and Kijinsen were just kissing each other, hugging and holding and playing little games, and then they went their own way. Well, they went their own way and the separation got so big, all right, and when Kijinsen stayed flat here, that was your sign to get into the trade. And on the 9th day it was flat. Okay, so you could see it starting to flatten out right here, and on the 9th day it was flat. You should have been looking to get into trade because the market, Tinkinson was so far away from Kijinsen right here after being so tight. That's a big sign to get into the market to the downside, but you want to be above the previous high. All right, and you want to make sure that daily candle close and you get the flat. So the day that it flattened is more than likely not the day that the high is going to be developed. All right, the high should be before that, but now it may not. It never know what's going to happen. And now my main trade is to trade it back to this point right here. All right, but you could see it's the 9 days from this candle here. So we had that 9-day time theory here. All right, so I wanted you to see that. That's a good opportunity. Now, we didn't get back to this point, but we made good profit. But then when you look at this whole picture on the daily time frame, all right, so looking at it on the daily time frame, here was the crossover right here. So it happened on this, we'll say it's on this candle on the 9th day. All right, so if we look at that on the 9th day, let me go back. On the 9th day, you start counting the candles because we had the TK crossover right here. So we go 1, 2, 3. The third candle was back inside of this Tinkinson here. So if you're not trading to the downside and you're waiting to trade based off of walking the dragon, because you had the rolling dragon and then you also had walking the dragon, and then the market takes off to the upside. All right, a lot of people look at this, sometimes you could see it looks like a dragon, and I'm not going to get really deep on it, but I'll draw it out real quick. You could see the dragon, and then he's walking. All right, and then the tail of the dragon. So that's basically where it comes from. All right, but the main thing that I'm looking at is now we pulled back. So this is walking the dragon. We pulled back in, and you could wait for the market to close above Tinkinson and trade. You're going to have your stop loss below this Kijinsen here. Now I use the fractals. Now you could use Kijinsen or fractals. One thing is Ichimoku is going to put you in some big stop losses. So we try getting a bounce off of this level would have given us a smaller stop loss. Much like I showed you on the 4-hour time frame, getting in on that entry when you walk your market up into that zone off of a long wick candle, that's going to give you also a better entry and eliminate some risk. But the trades that you're going to receive and opportunity to get are going to be good trading opportunities. They're going to be high probability. So on the 9th day we turned and the market dropped to the downside. We were looking at that flat. There's so many indications to tell you that that 9th day was going to drop here, and if we didn't even look at the 9th day, we still traded. What I'm telling you is this rolling dragon as the market, Tinkinson and Kijinsen kissed each other. They're tight. They're right next to each other, and then they flatten out. And then the day before or the next day, it doesn't even have to be the day before, but when that flattens out, when Kijinsen flattens out, look for the high of all the all-time high of that point, of that period, before it flattened out, and you're going to put your stop loss above that point, and then that's where you're going to start to look for your trade from that point. And you're going to try to trade back to Kijinsen. The market likes to get back to equilibrium, but here it didn't do that. But you could see on the 9th day we had a reaction. On the 17th day we didn't really get a reaction. The market was kind of flat. On the 26th day we got a slight reaction, and then we didn't get anything on the 33rd day, and we're coming up on the 42nd day here. So we're going to wait to see what goes on for the 42nd day, but we'll be patient and wait on that. So that's looking at Euro Pound. I'm going to go to a couple pairs. I'm going to go to Euro USD, and then I'm going to go to a couple pairs. We're going to look at some things that we have going on, so I could show you guys these trading opportunities and how you look at some of this stuff. But you can see again, this one I wanted to show you. I'm starting to draw it into the future now. On my 9th day, not really much happened, anything, But on my 17th day, there's a lot to tell me here that I should trade to the upside. The 17th day, basically, guys, first of all, you see you got a flat Kijinsen and you got separation here. Now, this isn't the main kind of separation that I'm looking at, but it is a good separation. So it's a nice C clamp. But on that 17th day, the market appeared to move up, and then we got a big candle to the downside, tried to fake you out. But you have to remember, this was a support level right here. The flat cloud, that big flat cloud, thick flat cloud, this is support. Even though it poked through there, that's still support. All right, and you're getting farther away from Kijinsen, and you got a big old C clamp here, and you're on your 17th day, and that's the day that the market's supposed to move to the upside. Well, the 17th day we didn't move, but we were allowed one day to the left of us, right? And that would have put us on the 18th day here, and it would have made an all-time low here. Not an all-time low, I'm talking about an all-time for this period that we're looking at right here. So it made a lower low. Then it made a fractal here after 2 candles later, and then the market moved higher. Getting into this trade would have been the thing. It would have been tough. You go down to your lower time frame, mark your bottom of your Kijinsen, of your Kumo right here, your flat Kumo, and then look for your price action entry, and you trade this back to Kijinsen again, as I stated before. Now you can see after the crossover here, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 candle took us in. All right, so now we're looking to trade back out of it, but it didn't really happen or work out. We went higher and then the market went sideways, so that wouldn't have worked out. But you can see how many candles go inside that level. All right, but then on the 26th day, you had a good reaction because now your market moved higher, but you found resistance, guys. So when you're up against resistance on the 26th day, you should be looking to trade to the downside. So you're going to box this market in and then go down to your 4-hour time frame and trade this down to the next support level. We already had a support level based off of this point, and the market dropped all the way down to that level there. All right, so then on the 33rd day, when it was supposed to turn around, because we're following right in suit here, you could see how it's following right in suit. All right, we're following right in suit because the market's moving from our 17th day pretty much to our 26th day, and then back to our 33rd day, and guys, it's moved right back up to this point here. Now we didn't get anything on our day that we were supposed to, okay, but when the market just moved, so we had a nice move here on one of our days, a nice move here, and then a nice move here. All right, so 3 times in a row this has worked for you. All right, and then this time we didn't get back. And then on the 42nd day, not much, not really anything happening. It didn't really turn for us. But we know we're coming up on resistance, right? So you could see that flat Kijinsen here. We didn't turn on the 42nd day, but the 43rd, 44th, and 45th, that 45th day we turned. I'm still looking for the market to drop to the downside because of the major resistance here. So that's how I'm going to trade this. I'm going to look at this resistance of the Kijinsen, how flat it is, and how flat everything is. Everything is flat. There's major signs here that this market is not moving any higher, that it's going to go sideways and drop. You trade this and still continue to look for what you were looking for, all right, to the downside, and you would have had a nice little trade here. Then the market goes to our 51st day. We don't get the reaction until the 52nd day, so we're 1 day late. But again, we get up to the support and resistance level, right? We're right up against this resistance level again, and then the market drops again, guys. I mean, you can't have it perfect, and everything's not going to be perfect, but some of these are perfect. All right, and then the market between 51 to 65, smack dab on 65, guys. We got resistance, right? We have first the bottom of the cloud as resistance, and then this very flat top right here as resistance. So the market drops again. Boom. And then you can see we got a TK crossover. The market was already inside. It broke out. You bounced off of Tenkan-sen. You get a trade to the upside. That's your trade, bouncing off of Tenkan-sen. Now, on this 76th day here, guys, I want to see if the market's going to fall before breaking this level here. All right. So I'll give the market this range level here, but I want to see if it's going to drop before it violates this point based off of 76 days. Now again, everything's not going to be perfect, everything's not going to work out. Sometimes you gotta really study the market. So being on the daily time frame gives you a chance to really think what you want to think. Like say this is resistance, or this is support, sorry, this is support, and I want to trade that support. So even though it's not the same day, the next day it's support and I want to trade that. This is resistance. If it's resistance, I still want to trade it. Looking at that, you want to be able to take your time. You can see that happening, right? And even if the market moves 2 candles later, we're still in that area, in that box where we want to be, all right? So that's looking at that, and I've got it drawn out to the future here. We're going to see where we could get something going, but I'm always going to look at support and resistance levels. So you draw your levels, have them in there. You could have this level in here. I mean, mark your levels in here. You don't want a lot of junk on your chart, so don't put all these levels. What I do is put them between points where I know they're going to go. I don't put a whole bunch of support and resistance levels because I have nothing but a big grid here. All right, so that's looking at the Euro US dollar. I want to go to the pound US dollar, look at that real quick. So the pound US dollar, again, I put it on the big news day. I've been putting them all on news days and looking to see what happens, but I'm going to look at that same trade that we talked about, and this is the same exact thing happening again. All right, so what I'm looking at is this. Look how Tinkinson and Kijinson are kissing each other again. So let me mark that for you. They are tight. They are in love. They want to hold on to each other. And then finally one of them gets mad. They start separating. And look at the gap on this. The gap is ridiculous. And see where it flattened out, that's where you look for the all-time low. Not the all-time low, I'm sorry, I keep saying all-time. But the low of that period. And this is it right here. So I could have traded this on the daily time frame and done well, because you could see the rejection, and then you could see I would have been trading to try to get back up to this point right here. So this is the level that I'm looking to get back up to. The market didn't get to that point, but you could see this is where we're trading off of this rejection, and I could go to my lower time frame. So what I'm going to do is show you what I would do to get into this trade. Let's mark this, and I also want to mark this support and resistance here. So let me mark this. Let me see where this is. All right, so it has a resistance here, but I'm going to mark this level here. So the wick didn't extend that far. I couldn't see where that wick was. I want to see where that wick was for the long day candle that had the big news. But I'm going to mark this, and I'm going to mark this. So basically I'm in a zone now, right? So when I come and trade, all right, so we put the big news day here, and you want to do that on these big long news days, guys. Put that on there, and then you could see the reaction happen on the 9th day. Boom, market moved higher, bounced off of its own support level, and moved higher. Again, this was rolling the dragon because we dropped here. So let me show you how we want to get into this trade. All right, so I'm going to box this candle in because it's the rejection candle. I'm extend the box because I know once it closes above that box on the lower time frame, I definitely want to be in already, but also I want to try to get in on a better entry than that. And I'm trying to trade up to the Kijinson. So let's go to the 4-hour time frame. So back to where we had this big area happen here. You could see, you could also see the same thing happening on this 4-hour time frame, and you would have had a nice trade to the upside, a little bit trade to the upside here, pulled back inside of Tinkinson, and then back down to the ground again. So we're going to look at that too. But you could see these so many opportunities like that. But we could have got in on this long rejection right here, but I think that pretty much set the stage on the daily. And then from there, it kind of was sloppy. Really would have been kind of hard to get into. But if you box that market in, you could have got in up here somewhere, and you got a good trade to the upside. Then the market bounce, and you also have that end pattern. We're going to talk about these waves, because off of these lows come these waves, and I'm going to show you those when we talk about the wave patterns on the wave theory on the next unit. But also, guys, so when we looked at this, you also see this 4-hour time frame. You could see how the 4-hour time frame here Tinkinson and Kijinson were kissing off of each other, and they stayed together. Even the market was, you can't start trading while they're together, so they had to cross over, and this is where everything starts happening, when they separate and make big space against each other. So you can't think about it in here, because yeah, they're getting farther from Kijinson, but Tinkinson's still riding with Kijinson. It shouldn't never be up here while price is dropping like that. The price just dropped too fast for Tinkinson. And then you could see where it was, and then you had a nice little indecision candle here. All right, and on that indecision candle, when we go to that, we still weren't all the way flat. So again, what do? We box this market in. Always boxing this market in, guys, because that's what's going to get you. You know where you want to be trading. You know what you're looking for. You know where you want to be trading. Then just look for that. Okay, so we boxed it in, and then we probably take the trade here, and it yielded some pips. It wasn't that great of a trade, but we're looking at that big picture overall, so that would have helped us. That's the one we're looking at on that daily time frame. But again, you could see how you do these trades. All right, and then again, if you look at the crossover, how many candles you're going to count, and then you're going to get back into the trade to the downside. But off of these, it looks kind of hard. You're like, no, I'm not trading that. So this was the crossover candle, right? This one was right there. Let's see if the next one, that wasn't, but this was the crossover candle. And then 1, 2, 3, 4, 5, 6 candles later, 7 candles later, we're back inside. So while we stay inside, we don't trade to the downside, but we closed out right here. So when we close right here, we go to the downside with this. We trade to the downside. All right, because you, after the crossover, you count 5 to 10 candles, and we did that. And then we don't trade while it's between this zone here, between the C-clamp, or between the dragon's legs, if you want to call it whatever. But once you close below Tinkinson, you take the trade. So it would have been here, maybe, or here, and then you trade to the downside. You top out. You see where your fractals are. You could use those as your stop loss, or you use your Kijinson. All right, and the market continued to move. You got a pretty nice trade out of that, and then you're looking to trade the other direction because you see what's happening with the market, right? So let's see. What do we? If we would have taken a trade, we would have got a pretty nice bump there. Okay, so you can see what you got. Good opportunities just using those trading techniques that I'm showing you right now. So that's going to be the pound US dollar. Let's go to the New Zealand dollar yen. Again, big news day. Look where I put that. I put that on the big news day, guys, right on the big news day. And then I'm just showing you that on the 9th day, the market did turn around. All right. And then on the 17th day, the market didn't turn around. On the 26th day, the market didn't do anything. On the 33rd day, it didn't do anything until the 34th day. So it only worked for us really twice out of this time here. And really, you know, like I said, it's not always going to be great, but I wanted to show you this because I want you to know that no, this is not going to work all the time, because there's nothing in the market that's going to work for you all the time. But make sure you have your support and resistance levels drawn. So let me see here. So where I would put my levels basically on this pair is right here. Always want to mark the very high and very low of a news candle, because when the market gets there again, it more than likely is going to honor that. If the market moves up to that level, it's going to drop, and if it moves down to this level, it's going to probably bounce and move to the upside. Then you want to mark this low here, and you can see we already came back and hit off of there and moved to the upside. And then you want to mark this level here. So you have some levels where you look for on these news days. This is what I'm talking about. You want to look for these support and resistance levels and mark them. And now you could use your days again to trade, because if you get down here on the 9th day, or you're up here on the 17th day, or you're down here on the 26th day, or we get back down here on the 42nd day, we're trading to the upside because we are at support, so we know what to trade. So that's what I'm looking at with this New Zealand dollar yen. I wanted you to see that it doesn't always work. So we're going to go to New Zealand dollar US dollar and see what that looks like. So New Zealand dollar, US dollar, I'm trading this into the future, all right, and I started here. I like to get on a nice high or a very nice low, and then you could see if you go back 9 candles, down to 9 candles, we are bouncing on support. The cloud is support, All right, bouncing on that support, and then you also had this rejection candle here. Then you want to box that candle in, or go to your lower time frame and get into the trade. So let's do that. Let's look at the lower time frame. We box this in, we could trade this. As soon as it violates this point or closes up here, we trade this at least back to here because it's so flat. But a lot of times what I tell you, when you got a flat Kijinsen like that, the market tends to do this. It tends to do this. Now, if it's very far away, it's not going to do that. But if you got a level that's not too far away, you're going to see the market do this while Kijinsen is flat. All right, but now if you had, let's say that the market closed way down here or way down here, it might only come back to this level. All right, it won't probably go above that level. So take notice of that. All right, take notice is Kijinsen. Whoops, sorry. Take notice is Kijinsen in the middle of the move, or was the move so much that Kijinsen wasn't in the middle of that move? All right, because basically if it's in the middle, then it's going to probably be violated a couple times as it is here. But again, you can see what we're looking at. I'm going to show you going to a smaller time frame, but you could have just traded this on the daily. 3 days later, you boom, you see what the market's doing. So I'm going to go to the 4-hour time frame after I box this candle in. And I know where I want to trade, right? I want to trade above that level. So we're still using the main techniques that we've been taught. That's why it's valuable to understand the first part of Ichimoku along with the price action and everything, because we're still using those techniques, but now we have an area where we can really look for that trade to happen, right? So now we're getting more precise with where we're going to be entering. So we're getting our entries more precise. But you can see here I boxed it in, so I could wait to the close here. I mean, we violate here. So much indecision down here, been hard to trade this, and you're sitting in here for days upon days, a couple of days, because these are 4-hour candles, so you'll be waiting. But you can wait for the TK crossover, and that starts a new trend basically. And you can see if you follow that TK crossover, guys, boom, you follow that Tenkan-sen, and then when we had the crossover, what did I tell you about 10 candles? There were so many opportunities on this one because we had the crossover here. All right, so let's say this is the candle, even this one. We'll go back 1, 2, 3, 4, 5. We're bouncing on it. 6, 7, 8. We're bouncing on there, and we would have been trading off of these candles here. All right, so I would have put a stop loss way down here and then bouncing off of that Tenkan-sen, because that crossover is strong and the market's moving higher. And then we came back, honored Tenkan-sen, bounced right on it again, and then boom, moved. This is an old pattern that we use, a morning star. Boom, market moves to the upside. Nice old morning star. Market moves to the upside off of the bounce of Tenkan-sen. All right. So that's what we're looking at there. That's how you get into that trade. Let's go back to the daily real quick. And again, so you see where we started, and then we got that 9 period. Nothing happened on the 17th period. And we're at the 26th period, and we're going to see what's going to happen here. All right. So I like that 9, 17, 26. These numbers work well. All right. So that's what I'm looking at there. Love this bounce off of this level. And look how high we went up. Nice bounce off of that level. Good trade. This could have yielded you some nice pips right here. So many techniques to use and so many things to see that you could defeat this market if you just take your time, slow down. Many of us are trading fast. We think we got to get in here fast. These are daily candles. I got all day to make up my mind with this thing here. I see this happen, and I still got 2 days before I even have to worry about the trade. And on the third day, the trade's triggered. We're trying to get in the trade like boom, right away. Here we go. All right, we don't need that, guys. We need to pay attention and watch this stuff, watch the bounces, look at these signals, look at where the market's bouncing off of these levels, right? So this is New Zealand dollar, US dollar. Let's go to US dollar CAD. I wanted to show you guys this US dollar CAD because just a couple things. We want to look at basically how many times we get a bounce here. So on the ninth day, we didn't move right away. We started to move before the ninth day, and then we slowed up, and then the market did move. And then on the 17th day, we moved. So you could see it happening. And then, so let's just mark this. The move started before the ninth day on this one. But on the ninth day, we still were able to get into a trade if we wanted to, and it moved up to there. Then it dropped down 2 days, and that gave us 17th day. And then the market moved higher off of the 17th day, which was right here. And that was a good move. And then the market came all the way down to the 26th day right here. And off of that 26th day, look where the market moved. And then there's a big clues here, guys. Major clues here that this market's going to drop to the downside again. First of all, this is the day that we're going to drop 33. We've got major resistance above us, all right, with this cloud. It's the last level of defense. And then we have a major long wick candle right here. That should have been a big signal the day before. This was the day before letting you know that the 33rd day that market was going to drop, and that market dropped. All right, so it happened every day. 9th, 17th, 26th, 33rd day. Now 42nd day, not really. 2 days later, after the 42nd day, it moved to the upside. So you should have been thinking maybe sometime somewhere in there we may get that move to the upside. If there was a support and resistance level there, then I would have really expected it. But it took 2 days, and then you had a bullish engulfing. Might have been a good opportunity to get into a trade there. All right, and then really on the 51st day, the market, you can see what happened with the market. We're a day late. And then we don't see much more happening here. Now we're sitting here on the 76th day, looking like the market's rejecting this, and we should see the market move higher. On the US dollar CAD, it could take a few days, but we should see the market move higher. Now you also want to always mark, if you're in a move like this and you have support and resistance level, if it's horizontal, you could mark it. Sorry. So we would do this. This thing is going crazy on me. So we would do this. Make sure you always still have your levels, okay, because these levels are going to be important, because you know on those days that's where we could see the bounce. All right, now these aren't clean levels for me, and I don't want to clutter my charts up, so I could do this. I can change these to be, I can change these to be thinner. Then you'll see it won't be as bad looking. You have more, you'll be able to see the market a little bit better. Now I'm looking for the market to move off of this, off of the 76th day, to move, have a nice move to the upside. All right, could basically put a trend line here. Look at that. Go from the bottoms. That would look like we violated that trend line right here. If you go from here, let's go to the body. Go to the body. We still violated it, looks like, pretty much. All right, so the market may bounce a little bit higher and then continue to the downside. All right, so there's so many ways to look at trading this stuff, but it's just some good ideas, some good things that you could look at. So now we're going to move now from the US dollar CAD. We're going to look at 2 more pairs, US dollar Swiss franc. So US dollar Swiss franc, you could see where I marked that, and then you could see basically this was another pair. Tenkan-sen and Kijun-sen weren't super tight here. They were kind of tight, but the distance is outrageous here. Okay, so you can see the distance. So when I'm talking about that distance, I'm looking at this distance from Tenkan-sen and Kijun-sen is far. Let's measure it. Let's measure how far that one was. So it extended up to 255. That's pretty good. Daily time frame, you could see a lot of times you may see it more than that, but it all depends what the pair is also. But you could see where we were looking at big C clamp, major C clamp, flattened out, had to reach top, start flattening right here, look for the downside. It dropped like a rock to the downside. Now when it dropped to our 9-day, and then on our 9-day we were sitting inside 2 candles, and then the market didn't really move off of that 9-day and didn't move like we expected it to. But then on the 17th day, we're looking for the market to move higher. It went down lower one more day on the 18th day, and then the market moved higher. All right, and then it pulled back, made a nice wave pattern here. We're not going to discuss that real quick, but then on our 26th day, guys, we had a whole bunch of things happen. We hit support here with the bottom of the cloud. That flat cloud right here hit support, had a bullish engulfing. On your 26th day, you had a bullish engulfing close. That's a trade to take no matter what. A bullish engulfing close with support on your 26th day. Is that telling you something? All right, let me say it again. On the 26th day, you had support and resistance with a bullish engulfing candle closing on your 26th day. Take that trade to the upside, guys. All right, so that worked perfectly again. So then we come back to the 33rd day. Look how many days are being honored here. So on the 33rd day, the market stops moving to the downside, bounces off of Tinkinson, and moves higher. This is just crazy. And then on the 42nd day, I could not plan this if I wanted to. I could not plan this to work out like this. We bounced off of Tinkinson on the 33rd day. We bounced off of the bottom of the cloud on the 26th day. We didn't have much happen on the 17th day for us. And the 9th day, we dropped to the downside, but we were looking I think we were looking for a move to the upside, basically. So maybe we misjudged our move here, but we had a move to the downside because we had a little pullback and then a move to the downside. All right. But then we go back here, and now we're at our 42nd day. Off of a 33rd day move to the high, then we go to the 42nd day, and the market dropped like crazy, just like we would have thought it was going to do. All right, and then it goes, guys, to the 51st day, and then it drops like crazy again. Again, these are wave patterns. We could measure these waves if we really wanted to, depending on where we got into the trade. So this is going to be a B down here. This would be C. So your wave started, and I use Fibonacci expansions for this, but you could measure these legs, and you measure the low here, measure the high here. You're going to use some multiplication. You're going to subtract them from each other, and then you're going to add them to C, and that'll tell you what one wave is, and it may be down here, and then the next wave may be here. You may have a wave here. So the wave is based on where the candle closes. So if this closed here, then we know that this would be, if this was an E wave, then we know that's what that wave was, right? And then we're going to say, basically, we got in up here somewhere because it was the 51st day. We knew we were going to trade to the downside. And knowing that, we know we're going to shoot for our target level. Now, we also know that point B is a point of resistance, our support here in this case, and if we were moving to the upside, it'd be a point of resistance. You want to get past that point and then measure your legs. All right, but you could see this definitely would have probably been like one of the wave patterns if I mark it, and I'm not going to mark it, but I just really wanted you guys to see again how many days we hit this to the point and everything worked out for us. It was really nice. Okay, so you have to take your time, slow down. You could slow down here because it's daily candles, and you could take your time, think about what the market's doing, understanding, hey, I'm at support here and I got a bullish engulfing. Yes, that's a good trade. This would have scared you out of your trade because you had a rejection here, and then you would have thought the market's going to downside, but it didn't. All right, so that's US dollar, Swiss franc. US dollar yen is my last one I'm going to look at. And then you guys should be good with this stuff. You guys should be able to start trading this stuff. But again, we have some very good opportunities here again. All right, so if I look at this, first of all, I want to look at this trading opportunity. The market's coming to the downside here. We had a crossover right here. So where that crossover happened, I'm going to mark it. Now that crossover happened right there on this candle. This candle, we weren't done yet. This candle, there it is. So then 1, 2, 3, 4, 5, 6, 7, 8 candles later we're inside. But now this, we wouldn't have gotten into this trade because on a news day, this was a news day and it took us way down to the downside. But we would have been looking to go to the downside. Had this not been a news day, we'd have been able to get a trade to the downside and trade it to the downside. Now here's where you would have been looking to go to the upside, but you had resistance above you, and then the market went to the downside. You would have been looking because you had a TK crossover and the market comes back in, but instead it breaks to the downside. Now I like to get in when the market goes inside of that level. I like to get in when it closes back outside of Tinkinson. Here it didn't. Now if you just get in on the bounce, then you probably got the trade probably goes up a little bit for you, and then it could be a loser, but you could probably stop it from being a loser because it still moved a little higher for you, but it just wasn't that big move like you expected it. All right, but you can see what's happening here. This is going to be move this off of here, and then we have starting from this point here, day 9, guys. Look what happened here. Day 9 up against resistance of the cloud. I mean, I can mark horizontal support and resistance and still see it, because if I mark horizontal support and resistance, I'm going to mark it at that big news candle that I told you. All right, you're going to mark the top of it, and you can see then you still got the cloud to get through. And then we had on the 9th day, guys, on that 9th day, we had a bearish engulfing candle, and the market dropped to the downside on the 9th day. On the 17th day, the market recovered for us, had a move to the upside, not a big move. And then on the 17th day, on the 26th day, we haven't gotten anything, and it looked like we were past that point. So it doesn't look like we honored. So I want to see if on the 33rd day we're down here somewhere, because if we are, I'm going to trade to the upside because we have that major support level off of this big news. So the 33rd day, we're looking to trade a bounce somewhere up in there. So that's it, really. That's all we're looking at. And that was US dollar yen. That was the last one I wanted to look at. So let's move on with the course. I hope you guys are liking this. There's a lot you could do with this. It's going to get you in a lot of trades. You're going to slow you down. You're going to see the market. You're going to see these things that you've never seen before, and you're going to be like, wow, I see this now, and it's happening. All right.